One of the most influential gatherings of gold thought leaders in the world is the London Bullion Market Association's annual conference. A survey of their attendees, which includes traders, miners, refiners, found that the precious metal industry expected gold prices to rise by 10% a year from now in October of 2025. In fact, gold prices have risen 2% in the last 4 days alone since the conference ended. So their prediction is already 1/5 the way there. What factors may push gold to these new heights? To answer this question, it's important to understand the factors that have caused gold prices to have hit record highs 34 times in 2024. It boils down to a number of things, but here are the 5 that I believe are most important. First, the Federal Reserve started to reduce interest rates. After keeping them high for so long in order to tame inflation, the Fed started reducing rates last month. Second, there's greater economic uncertainty, especially with the largest and most influential economy in the world, which is namely the United States. The Fed's cut was a big 0.5%, which was an acknowledgement that taming inflation may have tipped the economy into a recession based on the bad jobs numbers. It will take months to have enough data to sort it out one way or another, and that's why there's economic uncertainty. Third, there's greater geopolitical instability. The war between Israel and Hamas has deepened and now spreading beyond Gaza. Tensions have also increased in the South China Sea between China and virtually everyone else in the area, including increasing conflict with the Philippines. And the war between Russia and Ukraine drags on and is broadening with the recent rumors that North Korea might be sending troops to help Russia. Fourth, central banks, especially those from the BRICS coalition, which stands for Brazil, Russia, India, China, and South Africa, continue to stock up on gold for a wide variety of reasons. And last, there are 2 upcoming holidays where gold buying plays a central role. The Indian Festival of Lights, also known as Diwali, coming up in October, and the Lunar New Year, celebrated this year in January throughout all of Asia, but it's especially big in China. The reason why these are important is India and China are the world's largest retail markets for gold, and they are the 2 most populous countries in the world. So to determine whether or not the prediction of gold prices rising 10% over the next 12 months might happen, well, let's take a look at what could happen with these 5 factors. On the state of the U.S. economy, it's likely to get clearer in the next 12 months. If it points to an improving job market, interest rates will continue to be cut, and that will be good for gold. Now I'm going to ask you this. Do you think there will be peace in the Middle East and Ukraine in the next 12 months? Do you think China is going to give up its global ambitions? In my opinion, those things are unlikely to happen and may even get worse. That will be bad for the world, but it will be good for gold prices. Will central banks, especially the BRICS countries, stop buying gold? That again is unlikely. Central bank gold buying will likely stay the same or increase, and that will help boost gold prices. And will people in China and India stop buying gold? In my opinion, not anytime soon, and that will help support higher gold prices. Overall, the factors that have driven gold prices to an all-time high makes the London Bullion Market Association survey, their prediction, a very reasonable forecast. So what can you do to protect your retirement in this environment? Well, one thing is, if your retirement investments do not currently include gold, consider diversifying your portfolio to include some gold. One way, and in my opinion, a very easy way to add precious metals to your retirement portfolio is through a precious metal IRA. I have one, and mine is from U.S. Money Reserve.